While retail is still debating macro risk, we are already counting our P&L. This massive upward squeeze in ARM over the last few sessions has been absolute insanity. In the latest session, RM wrapped up the close at $380.81, logging a face-ripping 11% plus single-day surge. Meanwhile, our entry back on June 10th was filled right around the $306 floor. Do the math! That specific block is currently sitting on a massive 24.4% floating profit. Honestly, I'm even a little shocked at how fast this thing vertical lined. If you want instant access to our real-time watch lists and accumulation logic, hit the community link in the description. The most asymmetric reward plays show up when retail is paralyzed by fear. Look, hindsight is 20/20. This flush in ARM had absolutely nothing to do with the company's internal business. It was purely caught in the crossfire of that tech sector black swan liquidation. Market sentiment during those few days was pure trash. People saw tech tickers and just panic dumped blindly, completely ignoring whether the underlying business actually had any cracks. But we laid it out crystal clear in our video back then. The only metric that mattered was whether institutional capital would rotate back into the chip sector to buy the dip, because AIM's secular AI growth thesis didn't change. Their dominant position as the king of chip architecture design didn't change. AI, data centers, and mobile still cannot scale without them. So to our trading desk, was that violent pullback a risk? Absolutely. But it was also a gift-wrapped, highly asymmetric entry point on the chart. You all saw what happened next. Short-term sentiment experienced a massive V-shaped recovery, institutional order flow rushed back into semis, and ARM instantly ignited its short squeeze. Most retail brains love waiting for the trend to feel safe before buying. The problem is, by the time it feels safe to the public, the smart money has already squeezed out all the juice. This is exactly why we always tell our community, you cannot trade price action by staring at the rearview mirror of news headlines. You have to anticipate the institutional flows. Right now, Wall Street targets display a massive spread from a $140 floor to a $500 moonshot, with consensus at $286. Whales are conflicted, but the diamond-handed backing remains heavy. For our desk, the biggest win here isn't just printing 24.4% in 2 days. It's the flawless execution of our playbook. Extreme retail panic is precisely where alpha is generated. To see which hypergrowth setups we are preparing to ambush next, click that community link in the description. When the next wave hits, you don't want to be left at the station.